Daniela DiMartino Booth was on the stage, and she somewhat poo-pooed the BRICS. I think she got into a little bit of a tussle with James Rickards later after that because he looked the other way. I figured that no, that's not the case. The theme of my presentation is that the BRICS are more dangerous than ever, and dangerous might not be the right word, but I think they're becoming more legitimate than ever. Now, the crux of what I was talking about, it centers around the development that we saw a couple weeks ago where the Shanghai Metals Exchange came out and said we are going to internationalize our exchange by a series of multi-jurisdictional hubs around. The first one in which is under construction right now in Hong Kong, the next one in Saudi Arabia, and then a set of contracts has already been put in place to build these exchanges or these depositories all around the Belt Road, through Africa and through Asia, ultimately into South America. And you look at some of the other exchanges that just have come to rise, like in Singapore. We see the growing sentiment of not only the Shanghai Exchange, but the exchange in Dubai. We're going to have an exchange in Moscow that's going to gain prominence. You're going to have an exchange with the BRICS. The whole idea, and their announcement that the yuan is now convertible into gold on the Shanghai Exchange using that moment exchange rate for yuan, not converting into dollars, but for yuan. In other words, the yuan is being internationalized, and they came out and said this. So you can see the chess pieces are being put into place where they're going to internationalize yuan and trade it over their bridge platform, which they announced as well 3 weeks ago, they made the announcement that the renminbi cross-border payment system, which is mBridge, has been integrated and already fully operational with 11 countries in Southeast Asia, the Asian countries, and 5 in the Middle East, which at present time represents nearly 40% of global GDP. I think 38% was the exact number. So you got those countries. And then you have the BRICS, but then you have the Belt Road and the Shanghai Cooperation Organization. Each one of those two organizations alone account for, the SCO accounts for 50% of human population, 35% of global GDP. Now there is some crossover in the Belt Road, which is 70% of human population and about 50% of global GDP. You can add in other organizations like the Asianic countries I mentioned, the Eurasian Economic Union, like Kazakhstan and Russia. There's crossover, but all of these entities are closely aligned with the BRICS. They're not in the BRICS, but all closely aligned. And the whole premise of what I am talking about is that, first and foremost, the mistake the people in the West make is they think in terms of seconds and days. You can see these are very strategic moves that are being made to open a series of multi-jurisdictional branches of the Shanghai Metals Exchange and others that aren't directly correlated with Shanghai Metals Exchange, but they're all connected. And the premise is that every one of the countries where these exchanges are built will all deposit little bits of gold in all of the exchanges. So I put some gold in here, 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 and everyone does that. So the gold is not held in one jurisdiction by one player. And that way, any imbalances, whether it be once a month or once a quarter, is settled in gold and will ultimately be in various jurisdictions. So the pieces are being put into place. Now, when you think about the Belt Road, when you think about Shanghai Cooperation, when you think about all of these groups, the Asianic countries, Middle Eastern countries that aren't in BRICS, it's substantial. And the one pushback that people like Daniela make is that they're not legitimate enough. They're a sideshow. They're not big enough. Sergey Lavrov, I think, really upped the ante when a couple weeks ago he came out and said, after it became evident that the primary thrust of Brazil, Brazil's holding, it's in fact, it's today that the meetings are going on, yesterday and today, I believe, was that they want to develop a new payment system independent of SWIFT. That's what this is. But Lavrov came out and said, well, that's what they want to do. great, we're going to open up this new technology to non-BRICS members. However, it's not compatible with the pound, the dollar, or the euro. So they're keeping the West out, but now put it in context of what I just said with the Belt Road, the Shanghai Cooperation Organization, the Asianic countries. If they are all involved and closely aligned with the BRICS and the BRICS nations, but not BRICS, and they are going to open this payment system up, which allows for payment in local currencies, which only strengthens one another's economies and their own system, rather than converting to dollars, making the trade, going back from dollars to the other currency. You got 4 conversions back and forth, and all of this time. This new bridge platform settles in 7 seconds, not 3 to 5 days that SWIFT does. This new platform has a 98% reduction in fees. Someone asked me today, where else could I put my money that's good value? And I was thinking about it, easy answer is farmland, but farmland's expensive still, just like the residential real estate. And it dawned on me that over the last 20 years, through suppression of interest rates, the only asset class, it seems to me, that was held down were precious metals, because it's the canary in the mine shaft. And we've talked a lot about why perhaps the military-industrial complex, in my opinion, was holding down silver. We know about Gibson's paradox, why they would hold down gold, the inverse relationship between it and real interest rates. But in all of that time in suppressing interest rates, the byproduct was distortions in asset prices, such as real estate, such as bonds, such as stocks. Everything went way up. Greatest bull market ever, because we messed with Mother Nature. So when you try and think of where is there good value, well, we just said the real estate market's not, the bond market not, stock market. It's interesting, when you look at the stock market, you have the largest percentage of retail buyers, mom and pop, in the market than ever before, including at the dot-com bubble. It's like 53, 54% of all stock trades is retail-based mom and pop. At the same time, since the beginning of the year, you're seeing every single week institutional sellers sell. Over $2 billion a week since the beginning of June, average selling. The insiders, six sells for 1 buy. Look at the Buffetts, the Bezos, the Jamie Dimons. They're all selling. So the insiders have the lowest. They're selling out of equities, and they're buying commodities, because who's standing for delivery for $89 billion worth of gold since the beginning of the year? 89 billion with a B has come into COMEX. Who's standing for delivery for that? So the insiders are moving to commodities and selling equities at the same time that the retail public has been shy to come into this market, but is at all-time records in equities. What could possibly go wrong? And I'm thinking to myself, where else can you put money where there's value? Well, gold and silver got beat up so bad when everything else went so high. I'll ask you, why did they beat up gold and silver is the bigger question, because it signifies something deeper. And why are we seeing massive deliveries across the globe and central bank buying that continues to increase, and now the United States joining in on the massive influx of gold and silver? Why? And to me, is you say this and think, yeah, right, Andy, you own a gold company. Yeah, I do. But I don't know where else I would put my money. I can tell you right now, I have a managed account with Sprott out of my respect to Rick Rule when he was there, for all of the years that he sent me his client's business. That was the least I could do. I don't even know, Eric Angeli is a great guy. I don't even know exactly what stocks he does, but I trust them. I have gold and silver. I own a metals company. I have no debt, and the only other place that I put my money, period, is in 4-week duration or less U.S. Treasuries. I don't know where else to put it. And I'm not the poster child for Finance 101. So yes, done again, buying gold and silver to me has never been more important. Ever, never, never.
The peak.
In 1980, it was 1-to-1, 1 ounce for the Dow. And what is it right now? What's the Dow at? 40 what? Let me do a little math real quick. The Dow Jones is at today 44,000 divided by 3,300. So, boy, I'm having, here we go, 44,000 divided by 3,300, 44,000 divided by 3,300, 13.33 ounces. It was 1-to-1 in 1980. So yeah, yes, it's at, gold is close to an all-time high in nominal terms, but nowhere near an all-time high in its relation to Dow stocks. And, that would certainly preclude anyone from buying real estate or stocks at this juncture. And I think it's it's important to understand that what is the dollar worth today in relation to so many things. It's the dollar is massively losing value, and so the continual printing of dollars is masking as well the real value, because inflation is masked, the CPI is masked, and I don't trust any of that, to be honest with you. I think it's better to look at it in terms of gold versus Dow than what the dollar price is.